Okay, looks like everything's recording. You see my screen here on the left, Symposium, the dates and the slides. Yes, perfect, cool. Okay, well, welcome to the Pipnotic Symposium on the 23rd of January 2013. Today we are going to talk about short-term trading. I know I talk a lot about long-term trading because that's how I like to trade, but I won't deny it. I also spend quite a lot of time on the smaller time frames, trading like the London Open and stuff like this, and also for various programming projects that I'll share with you in just a moment. And so I think it's just an important lesson. I want to bring you up to speed with what we can also do on the shorter term time frames. Okay. Okay, so the agenda, it looks pretty big, but it's not that big. We're going to talk a little about setting up the chart for when we trade shorter term. We're going to discuss the prerequisites when doing so as well, and we'll also have a look at what we want to see, so ideal setups. And we have something setting up at the moment, so I think this is a really nice time to look at it. We'll look at targets and stops, then I'll give a demo of the charts and show how everything is looking up. And then we're going to discuss an email that someone sent in, and I'm also going to share something regarding some traveling that I'll be doing here over the next couple of months. It shouldn't affect these symposiums too much, but I might have to move it around depending on what's going on. But we'll have to see. But of course, you'll be informed if anything major happens. And then we have an announcement at the bottom. Okay, so let's dive straight into it. So setting up this strategy requires that you have two halves of your terminal. So you have the right half, which is the currency strength information, and for this you need a long-term, medium-term, and short-term, and this is the same for all of the strategies when we look at currency strength. And on the left-hand side of the terminal, we have the price dashboard. So this is going to show us supply and demand for trade management, but also the session boxes that we use. Excuse me, when we're qualifying these trades. Or you can look at one chart, and you can simply have the new currency strength indicator, the text version, at the bottom of the chart. And this is pretty handy. I like this one very, very much, and I find I'm using this more and more. And I'm also going to show you a little bit about how you can use the text version for managing trade. So the configuration will be in scout mode, and the look back will be 8. So I'm just going to show you exactly what that looks like, because I think it'll give us a little bit more clarity. Let me find my terminal. It's here. So it looks like this. Remove all these like that, so you can see what it looks like. We have the longer term, which is here, and if we have a look at the configuration, we are looking at the mode setting, which is put in session open mode. So this simply tells the indicator that we want to look at the information that we have available here, and we want to the look back to be automatically set to the time at which each of these sessions open. And I normally trade this strategy at the London Open only. I don't want to sit in front of the computer too much staring at charts, so I like to make sure that that I can do it at the London Open. That's also when the real volume enters the market, so I like this one very much. And we have enable static period. This has to be set to true. This is very important, and the static period is M1, which stands for 1 minute, like so. So it looks like that. And then here we have the middle one, which is the medium term. And here we have the look back setting is set to the look back, which is the value that we specify. This one here, which is 60. Static period is true. And we want it to be minute data as well. So we're looking at the past 60 minutes. So this is simply showing us currency strength now relative to currency strength 60 minutes ago. And you can see that the Australian dollar is strong and getting stronger, and the British pound is weak and getting weaker. If we look at the bottom here, we have something similar. We have the look back, and you can put this on. I normally put it on 30 minutes, but you can put it on 15 minutes if you want, but I wouldn't go any less than that. I like this. Normally I keep it on 20 to 30. And this is, of course, minute information as we looked at earlier. So it looks like that. So we have the currency strength information on the right-hand side. Let me let Kimberly in. Hi, Kimberly. And we have the price information on the left-hand side, like so. And the other indicator that we're using is the open session box, and it looks like this. And this is a very simple tool, and I'll just show you what it does quickly. It operates in a similar way that we saw in the strength information, but here we specify the information about when the session opens, and we only care about the open of the session, because when one session opens, the previous session is kind of terminated prematurely, so we don't really care about the end of the session. So we have the opens, and we have something here, minutes into session, which is 20, so 20 minutes into the session. This is really, really important. Yeah, and the session box is 15 minutes, which means that the top and the bottom range of the session box will lock after 15 minutes. So it'll keep adjusting itself, getting wider and wider until the first 50 minutes of the session closes, and then it'll lock, it'll close. And so then you'll be able to see when price starts to move outside of this box, which is important for this particular strategy. Okay, good. So we have that, we have the right side, we have the left side. And we also have, I mean, this is the very thorough way to look at this price information. And so you can see here that I'm just going to focus on a trade on this particular configuration, or this setup, where we have the Australian dollar. And for the European session, you can see that the Australian dollar is being bought more than any of the other currencies currently. And we have the British pound, which is selling off. We have the same on the past 60 minutes. So this is since the beginning of the session. This is over the course of the past 60 minutes. And here we have the course of the past 30 minutes. So you can see that Australian Kiwi at the top here, also down here, and we have the British pound. So we want to be selling the pound and buying Australian dollar. If we just drag this pair onto the chart, we'll do it both at the top and at the bottom. What you want to do is you want for a price to show you this after this line. It's a really, really bad idea to take trades before at least 20 minutes of the session has lapsed since it's open. And this is because the liquidity is normally too thin, or the orders rather that are put into the market at that time are normally not big enough to set the sentiment for the session. And so I put this visual indicator like on the chart like this, and this kind of gives you a visual indication of when price has reached this very, very important 20-minute threshold. And we also have it here, but it's just a little bit further down. Let's see if I can find it. It's pretty far away now because the time has passed. But it'll show up as a vertical line also in the strength information here. Yeah, there you can see it all the way over here. So, I mean, the session opened here, and this is the development of the currencies since the open of the session, or rather since 20 minutes into the open of the session. Okay, good. And so ideally what we want to look for is we want to see something like this. You see we have the Australian dollar, which is strong, getting stronger, and we have the British pound, which until it started to pull back, it was looking pretty nice. So these are the currencies that you want to pair. I mean, you want to see this kind of pattern, so from like this or more so, and this or more so on all three windows. So if I just draw like a perfect scenario in, say we have the zero line, which is a white one, and we have the currencies, a lot of them are kind of moving sideways like so, but the one that we want to buy, we want to be looking like this, and the one we want to sell, we want to be looking like this, and you want it to be like that here, here, and down here as well. This is important, very important. And the reason you want to see it looking like this, it's pretty common sense. It's just momentum. You want to see a currency that is strong and being bought, and another currency which is weak and getting sold, which you can see here. We have two good examples of it. And we have the British pound, which is similar to this one. It's not as pretty, as this one, because you can see that we're having a bit of a pullback. But this is when you look at the higher time frame information at the top here to kind of help qualify. And if you have the Australian dollar that's still at the top and the British pound, which is still at the bottom, then you can just consider this to be a pullback and get into the trade anyway. And I'm just going to show you a little trick. I mean, assuming that it's really early in the session and these lines are moving very, very quickly, perhaps too quickly, then what I normally like to do is I like to put 120 like so. So I'll simply look back 120 minutes. I'll press OK, and this will show me what's gone on over the course of the past 20 minutes. Sorry, 120 minutes. And so this gives me the longer term, medium term, and the shorter term. And as long as it looks like this on the longer term, then the direction or bias of the two currencies is probably going to continue for a little while longer. So you can, with confidence, get in. Okay. Okay, so that was this one up here. So we have the very graphical version, and then we have the less graphical version, which is a text version. I'm just going to just click this on. I'll try this one here, and we'll just put the strength on. And this is, I really like the new indicator because it just gives you a tremendous overview of what's going on across the boards on all of the currencies throughout the course of the time frames that you're looking at. And for this one here, we want it to be in scalp mode, and we want the look back to be 8. And so I'm just going to do that very quickly just to make sure it's there. So we have periods to show 6, look back. We want this to be 8. And we want it to be in scalp mode. Press OK. And it'll just churn a bit of data there, and eventually it'll snap back like that. And you can see it's looking like this. And so we have 1 minute data here, and you can click on the chart here, and it'll color the time frame white. So we have 1 minute data here, 5 minute here, 15 minute, 30 minute, 1 hour, and 4 hours. So we're looking at a pretty substantial amount of data. And so we want to see the currencies similar to the lines that were going up and down. We want to see them lined up on all of these. So we want to see either the most or the second most excuse me, attractive currency, and the weakest and the second weakest currency. We want to pair these two. So assuming that the euro was red all the way across and the Australian dollar was green all the way across, well, then we would sell the euro Australian dollar in the similar manner that you would on using the other strategy. But the thing I like about this is when you're looking at so much more data here, where in the other configuration you're looking at 120 minutes, and here you're looking at 8 4-hour candles, 8-hour candles, 8 half-an-hour, 8 50-minute, 8 5-minute, and 8 1-minute. And so the degree or the depth of insight you have into the strength of the currencies is much greater when you're using this configuration here. And as a matter of fact, I often trade this configuration like this around the close of New York. So when New York closes and things start to slow down, then I'll often get into trades just based on this information, because the news is over, so the high volatility is over, and the stronger currencies are going to continue to attract flows, and the weaker currencies are going to continue to shake flows. And so it's just a pretty good way to trade, even for a few minutes towards the end of the day, so the close of the London session. And I do this pretty often, you know, I'll be maybe watching watching a documentary or something with my wife, and I'll have the laptop over in the arm of the sofa, and I'll use this and kind of have a quick glance over, and if something's going on, then I can click into a trade. If not, then I do nothing. It's just a really nice way to view what's going on across the boards. So this is a good one, very good. Prerequisites. Okay, well, first of all, before you get into a trade, you have to make sure that there is no news affecting the currency that you're buying. Even if you know that non-farm payrolls will be much better than expected, you still may lose money due to the liquidity voids up to the news, because liquidity dries up, and so price has to seek the liquidity, which will often result in very, very spiky price. So price will gap up to seek offers, and it'll gap down to seek bids, and so price will have to jump around to fill orders. And so even around the news, it's just a super bad idea to try and get into a trade. So I recommend not touching a currency when it's being traded. When economic data releases are coming out. This is a very, very important point. And another one is wait until the 20 minutes has passed into the session. And I learned this the hard way, where I thought that I would, using the other configuration with the dashboard on the right-hand side, I would see two currencies starting to diverge. And it would be maybe 8 o'clock London time or 8:05, and I would get in only to find out that the trade was just a false breakout. And this happened to me so many times that I refuse to do it anymore. It's just really not a good idea. So simply wait for at least 20 minutes to pass, because you have to think about that when the institutional traders come to work, they're not filling the orders on their books at 8 o'clock sharp. First they have to get to work, drop off their coats, have a cup of coffee, maybe chat with a colleague, read email, whatever, and they get to their orders at about no earlier than about 20 minutes past the hour. And I actually did a bit of research on this topic. Let me see if I can show you a link to that. So if we go here. I did a study about this. It's on the Pipnotic website, and I'll just find that for you because it's really interesting. Search London. And this one here. Yeah, so the European session trading the London Open. And this just tells us, this is based on a lot of chats I had with some of the traders. You know, I spend a lot of my time in banks doing security work. And this is the kind of the routine that they were telling me. So 20 minutes to 8. You have to find, in Denmark, we ride bikes a lot. So, you know, they're on their way to work. They have to park their bike, get their cars parked. Walk to the reception, dump their gear at their desk a little bit before 8 o'clock, you know, go to the toilet, whatever, have a cup of coffee, chat with someone. And so they're not really ready for work until, well after 8 o'clock, you know, 10, 20 minutes past the hour. And so if trades are getting filled here, this is probably, I don't know, maybe something in Europe somewhere, and these are generally smaller sized orders. So when London town gets going, I mean, this is the financial center for currency trading, and so most of the major flows are going to move through London. And so it's just a really good idea to wait until after 8 o'clock. And I recommend that you have a read about this. It's a really, really interesting study. And actually here is a graphical representation of a trade, what it would look like when I would take it. And so I would put 3 instances of the indicator at the bottom of the chart. This is another way you can do it. And so the thick line will be the session look back, the medium thickness will be the 60-minute, and the thin one will be like the 15 or the 30-minute. And I would simply overlay them like so. I'd put my indicator like that, and then I would wait for price to start moving away, or I want to see all 3 lines above the 0 line for the strong and below the 0 line for the weak, and I would wait for price to move past 15 minutes. Then I would sell. I would simply get in, and this is actually what my trades often look like. And these here, these magenta colored lines, these are simply, actually I'll show you what they are. On the smaller time frames, you'll notice that price likes to bounce between these round numbers. So I started enabling these, and I think magenta is, what color is that? I think it's an old color setting, but price would normally move between these multiples of 10 pips. So here we had resistance, pop through, resistance becomes support, pop through this one, resistance becomes support, and then it just would bounce between these lines. And so this is, what number is this? This is 7210, 7200, 7190, and so on. So these are actually multiples of 10 pips. And just have to be a little bit careful when price gets close to this, especially with their multiples of 50 or 100 or even 20 pips, because a lot of these pairs respect these very much. And you can just see how they bounce between these levels. Here we have another one. Here's 20. Let's go to maybe the 1 hour. If we go to the half an hour, then you can see these are multiples of 20 pips. So we have 7120, 7140, 60, 80, 100, and you can just see how price stops at these levels. This price, this gap, we moved up here very quickly, we stopped, we opened, we moved up, we moved through this one, stopped at this one, came back down close to here. So you can just see how price respects these levels. And so I normally use these for a visual indication of where I should be reducing risk or getting out of trades altogether. This is just a really nice graphic of that. And I didn't mention that, but you can put the indicator like this below a chart. So you can actually have, let me move this slide over here. So you can use this configuration, but you can simply wait for a currency pair to diverge and then drag that currency pair onto a chart with this configuration, and it'll give you a really nice overview of what the currency strength is doing. And so even though price pulls back here, you can see that the CAD is still in control, the American dollar is still weaker, so we anticipate this pair to continue to move lower. And I'll just show you quickly how to do that, just in case you're not familiar with it. I know we have a couple of new members that have signed up recently, so I'm just going to show what this will look like. So I'm going to remove this one. I'll just turn everything off there. And now I'm going to move 3 instances of the strength information. We'll take the production. Oh, come on, computer. There we are. Okay, so we have, here it is. So we'll take session open. This is going to be true. And we're going to make this line thicker. We'll make this 5. And we're going to set display active currencies to true. So this is going to go to true like that. So now we have one instance. We do another one, and we drag this one onto this window down here. We do the same thing. Look back setting. This is going to be 60. This is going to be minutes. We're going to show the active currencies only. And we are going to disable the 0 line, because then we're going to get multiple 0 lines, which we don't want. We're just going to set this one to false. Then we enable that. And we do one more time, and this is for the really quick one. So we set this to true, true. We'll set this to, I don't know, 15. We're going to disable the 0 line. And we're going to put this to, we'll put this to 1, so it's nice and thin. So the thick ones are significant and the thin ones are less significant. Then you can see it looks like that. So it gives us a pretty good indication of what's going on. And you can see that we have the dollars starting to sell off. The Kiwi's just about to cross it down here. But overall, we have the Kiwis high. So we're expecting this to crawl higher. And of course, you have to make sure that you realize this is 1 minute information. So we're on the 4-hour chart, and this pair is, let's say it's moving down, and you think like, wow, but the Kiwi's stronger, this pair should be going higher. Yeah, but we're on the 4-hour chart, and the configuration of this is looking at 1 minute information. So just be careful of that. And as a matter of fact, we had a look at the pound Aussie. We're just going to drag that on there quick and just see what that looks like. So this pair should be, go to the 1 minute chart. So this should be moving lower. And if we zoom out just a little, you can see that around just here, you can see that the Aussie moved above the pound, and it's still above. And you can see shorter term, you can see this short term, the pound has picked up in strength. But don't get scared, don't bail on the trade. Just wait, because we still have the medium term and the long term in charge. So we have let's say a couple of hours of strength information, 1 hour strength information, and the thin line here is going to show us the pullbacks. So you can see that the pound is moving higher here, and the thin lines are going to cross all the time, and then you're going to see these in the price as pullbacks. So don't be scared. But what you do want to be a little bit nervous about is opposing supply and demand. So if we have a whopping great area of demand, so we have this down here, and the strength information is saying that we're probably going to move through that, just be a little bit careful. Maybe take some profit or reduce the risk, because price will probably have a tough time moving through a decent area of supply and demand. I'm not saying that this is a decent one. I'm just saying that if there is a decent one, price will probably have a tough time moving through it. That said, you can go down to the really small time frames on the 1 minute chart. If you have like extreme strength readings, you can hold the position. I mean, if you have the orange at the top and the red at the bottom, hold it, go to the 1 minute chart, and just watch how price will eat through these areas of opposing supply and demand. It's really educational, and it'll train your eye to focus on the really important information when studying currency strength. And this trading strategy requires an awful lot of practice, but once you master it, it's pretty phenomenal. And it enables you to, if you don't have a lot of time, you have perhaps an hour in the morning, then you can do this. You can sit in front of the charts, you can flick it on, have a quick glance at 20 minutes past the hour, things steady up, yes or no. You can see this very quickly. Then you can put on the trade. Maybe the trade will last for 3 minutes, maybe it'll last for 3 hours, but generally, if the trade moves in your direction, you can get the risk out and walk away, which is the beauty of it. So it doesn't require a lot of time to trade like this. And this is counterintuitive, because I know the mainstream belief is that scalping is super time consuming, and while some of them can be, if you consider strategies that force you to trade the same way throughout the entire day, then of course you have to focus and look at the screen all the time. But this one focuses on a very specific time of the day, which is over within like 1 or 2 hours. So just keep that in mind. And this is also just a really nice way to trade that as well, just because of the graphical representation. Okay. Super. So those are the prerequisites. This is really important. I'll just say that one more time. Really important. So please pay attention to that one. And do your own testing. Try and throw in a couple of trades at 8 o'clock and see what price does. And you'll learn very quickly that the price normally does respect the time of day at which the main centers start to move. Okay. Okay, so what do we look for? We want to see, we kind of touched upon this before, but we want to see very clear currency strength divergence on all three of these charts. So if we're, okay, let's go back to the scalping configuration. And so we want to see the same reading on all of these time frames. So we want to see a currency that's strong and being bought, one that's being sold and continuing to be sold, and you want to see this across the boards. And you can see these; they jump out at you very, very quickly. And just for an exercise, if you wish to kind of entertain trading like this, if you want to try, create a configuration like this, and simply watch it at the London Open or the New York Open. The Asian session, the Asian Open, you're not going to get a whole lot of divergence because there's not enough clout in the Asian session. But if you focus on the London and the New York sessions, then you'll see what I mean. And you'll see those circumstances, those examples of when the euro just goes north and the dollar just goes south. And you'll see it. It's so clear. And you'll see all the other lines kind of sticking to the central line, the zero line, and maybe a little bit above or below. And the ones around the zero line, they could actually be quite far away from the zero line, but the euro is so strong that it makes it look like that it's just around the zero line. And you'll see these all the time. They occur a couple times a week. And just try and observe those. And once you see those, just know that those are the ones that you want to pull out. Those are the really, really good ones. And if you have, here's a little tip. If you can see, let me draw this just so it's a little clearer. So if we have the zero line here. If you have a currency that's moving up like that, and you have the weak currency that's moving down, almost in a reflection, I mean, what does that tell us? in contrast to a currency that is moving up like that, another one that's kind of moving like this. What does that tell us? Can anyone guess what that means? Because it means something very clear, and it's really interesting and important to be able to know the difference between the two. Well, I'll tell you, if you see a currency that's moving like this and another one that's almost its mirror reflection, this tells us that the euro is strong and the American dollar is weak, and these two currencies are being traded in relation to one another. So this means that the euro USD is being bought, where if we have this one here, and this is the euro here, this is the euro, and this is the Japanese yen, for example, you can see that the euro is strong, but the Japanese yen is weak, but it's not the buying of the euro Japanese yen that is causing the euro strength and the Japanese weakness, if that means. Sorry, if you know that, if you follow me. And so these here are telling you which currency pair to trade. And I repeat, which currency pair to trade, where this one here tells us which currencies to pair. Well, what's going on there? Okay, and so this is number one. This is the best kind you want to see, and this is number two. These are also fine, but these are the really nice ones, and these are the decent ones. Just a little tip on that, and you can often see this. See if we can see anything like that now. When you get a reflection, no, we can't really. There's nothing really clear here at the moment, but you'll notice that as well. Let me delete these. Excuse me. Okay, good. So we want to pick the strongest and the weakest, and we want to pay attention perhaps to the form, the shape, kind of the reflection, degree of reflection in the currencies, because this is, as we talked about earlier, these are the best currencies to trade. Good. Okay, what about targets and stops? Well, targets and stops, you can do this in a couple of different ways. What I normally do is let's find a pair that kind of respect this. Okay, if we take this as an example, assuming that we were told to sell the euro US dollar, what I would normally do is I would put a sell stop just here, a couple pips below the bottom of this, and the stop would go above the box like so. You can do the sell stop, which I've done a lot, but I found that price always pulled back, always did this. So it would gap down, I'd get filled, then I'd have to stomach this, then price would pull back, and then you'd have to kind of struggle with this psychological, this pullback. Oh, no, it's coming back. Or assuming it drops down, it comes back. Oh, and you have like all these pips here, and you have to give these back. 20 pips, you have to give those back here. Oh, just to see a retest, and then, oh, okay, it worked out. And so this is psychologically rather taxing on us. And so you want to, I went away from using the sell and the buy stops, and I started doing limit orders, or just clicking just market orders when price came back. Because if you have currency strength divergence, you know that you should get in, and you know in what direction, and you know pretty much at what price. And so what I'd do is I'd use the rectangle drawing tool, and I would draw my rectangle so I knew exactly the size of my position. I would do new order like so. I'd have it all ready and set, and then when price got there, I would simply sell at market, click, and price would go up, then it would come down, and that would be it. Then I'd be out by the time price got down here or whatever. So you can also do it that way, and I prefer doing the market or the limit orders more than the stop orders for that exact reason, that I didn't really like having to kind of give back all the pips before seeing if it would turn around. And so you can see, if we consider a supply and demand theory a little bit, you can see that price is at like a disparity, then price returns to parity. Disparity, it returns to parity. And so if you get in at a sell stop, in this case, price will be at disparity as it's moving, as it fills your order. And then it'll almost always have to pull back to rebalance price, to return price to parity before it figures out what it's going to do. And I really hated that. And I sit there all the time thinking, damn it, I knew, or I had a good feeling that I wanted to sell here, but I got in a market just here, or a limit order, a sell stop, just to see price come back. And it's because when you trade like this, it becomes very, very exciting. You can see that the price, two currencies are diverging, and it is very exciting. In contrast to longer term trading, which is pretty boring. And I prefer the boring part, because then you don't get all excited and start getting trigger happy. And so you have to remember, stay a little bit disciplined and say, yes, price did jump away from me, but I'm going to let it, and I'm going to sell the pullback once it comes back. Just keep that in mind. But try doing stops, sell stops, buy stops, limit orders, and market orders until you figure out what you're most comfortable with. Okay. Super. Yes, so you can, if we go back to this, I kind of jumped off there, but we talked about how we're going to get into the market, the targets and stops. Stops, if you're using the box, you can just put it above the box, or you can put it above an opposing area of supply. So here you can see we have supply here. We have a price formed this, and this area here was demand, which is qualified by this trend line break. It was tested, so this is qualified as demand, and this was taken out by this child, the parent being up here. So you would want your stop to be above the parent at the top here, and your entry would be down here, either a limit or a market or a stop or whatever you like. But you want your stop to be on the other side, of the far side of opposing supply and demand. In this case, we'll be putting our stop just above here. So it'd go from here to here, like so. And for targets, I normally go to like a slightly bigger time frame, and I would look for somewhere to, actually this is a pretty nice area to sell. I'd normally go to a bigger time frame, the hourly, the half hour, and I would look for an opposing area to get out at. And I would do it like that, but I would keep my eye on the strength information just to see if things change, because you have to remember this is short-term trading, and while these trades can easily give you 20, 30, 60, 120 pips, they don't always, and they're not meant to do that. This is shorter-term trading, so you're going to be in and out a lot quicker. But if the trade turns out to be well, for example, price reacts at a nice area of, for example, daily supply, and it moves away and you manage to get in there, then it's going to move on for a lot longer, but you don't know. So just look for opposing logical areas of supply and demand to get out. And I can send a bunch of old, my trade log from, it was a couple of years ago, when I documented all of these. I have quite a few images, screenshots of this, and I can send those along if anyone's interested in that, just so you can see kind of the stuff that I was looking at. But they differ quite a lot, but you can see if you want those. Okay, good. So we spoke about that. And yeah, for a demo. So if we, 1, 2, 3, 4, 5, good. So if we have a quick look, we'll go to the minute information. Okay, you can see here, assuming that this is the open of the session. Come on. So, okay, so you can see here that we have, what do we have? We have the Canadian dollar, which is weak, and we have the Kiwi, which is looking pretty strong. So if we pair the Kiwi CAD, we're just going to force this just so that we have something to look at. Kiwi CAD. Move it up there, move the one down here. So this pair should be moving higher. Go down to the 1 minute chart here. So assuming that the open is just here, so the session just opened, we have our vertical line just here, then we would look for a place to do. Had we taken the the buy stop would have been filled, and our stop would be here, and price would be up to 1-to-1 now. And when that happens, you don't want to let these trades go against you, because normally they're quick. They can move up 20 pips and they can come back 20 in a matter of minutes, because it's a shorter term kind of burst of momentum. So you have to take the profit when they're there, because they're not going to stay. It's not going to stay there forever. It'll almost always come back, unless there's something fundamental that's driving price. But assuming that we would have bought here, then price moved to get up here. So if we would have gone for a 1-to-1 target, we would have hit it. If we would have held it a little bit longer, well, then we'd be stomaching a bit of a, we'd be giving back some pips now. And then we'll just see what happens. I'll leave this open. But price will probably come back here. If we're trailing the stop, we would be perhaps at, we would have maybe no risk now. I'm just going to change the color. Red. This is our stop. And here we have our buy. Which will turn to green. Super. So now we have no risk in the trade. That's good. And then what I'd like to do is I'd like to keep my eye on this. And so I'd probably drag this to all of these, like so. And I would go like this. I'd put this like that, so that I can only see the currencies that are making up the position. And I would use this to manage the trade. I'd watch, and I could see, like, okay, there's absolutely no reason whatsoever to close this trade. So I'd leave it. Then I'd take it up here, I'd go on the bigger time frame, and I'd start to look for a place to get out. And we're going to have to go on a bigger time frame. And you can see here that if we have a quick look, we have this. Okay, we have this area of demand here. This has been taken out by what? By this. This is a child. This is messy. We go to the parent. We move this to the area that did it. Parent here. This is actually not a parent. It's an older sibling. The parent is here. So we'd move it like that, maybe something like that. So this is the point where prices are reacting. So then you have to ask yourself: is price going to move through that or not? Or on a daily chart. We'll move it up here so we get a little bit more room. We're on a daily chart. We're approaching the big figure. We spoke about that just a minute ago with these round numbers. So we'll go put it there. Here's the big figure. We've tested the big figure. Are you going to hold that, or are you going to get out? I would get out, or I'd take most of it out and I'd leave a slice on to see what happens. But you have to be very careful of these. You can see that we tested this once. Price had a really big run up to this daily supply. What does this price, this really big run here, tell us about price? Is price at parity or disparity? Disparity. Parity is back down here. So price is too expensive. So currently you don't want to pay this much money for this currency pair. Remember that we're shorter time frame, and so you can easily get in here, but you have to remember we're reacting at the big figure, at supply. So we're probably getting a reaction, and price is probably going to feed down into the base, into the point of origin for this this price imbalance of this disparity in price. And so price is probably going to move against us at some point and hit our stop. And so as soon as you get into a trade, you want to do your analysis to find out exactly where you're going to get out. And sometimes you can't do the analysis before, because you don't know which currencies you're going to be buying and which ones you're going to be selling. So you just have to be a little bit quick at doing your analysis. And here we found this. We tested here. So price could easily go up to the highs here. So we have our stack of pancakes. You see the first two pancakes have gone. The third pancake is just here at the 96.31. So price could easily stab up into there, which would give us a lot of profit, but you don't know. You've got to keep in mind we are reacting at the big figure, right on the money, and price reacted. And so then you have to go to the smaller time frames and look at strength, like we spoke about earlier, to see if price is going to be strong enough to kind of wriggle through this to consume the opposing supply. And you don't know. You have absolutely no idea. But keeping an eye on the strength information will give you a pretty good indication. You can see that the CAD is really selling off. And so at the moment, there's absolutely no reason to get out of this trade. We'll just watch it just for a minute and see what happens. You can see it's still wriggling. And you can see this is still, this is a really nice example of a currency that you would want to sell. You know how earlier we spoke, I tried to draw them for you. This is a pretty nice one here. You see how price kind of is accumulating here, and then boom, then we cut through, accumulated, cut through. This is actually showing us, if you overlap this with a 1 minute chart, there's going to be accumulation here and here, and there's going to be a green candle here and here. Yes, and so he's going to, you just kind of keep your eye on there, and we want this one to go higher. It's kind of flat. You can see on the past hour, it's kind of moving lower. On just up here, it's starting to move in. And so this one does not have to be below this one for it to pull back. It just has to start pointing down. If it starts to point down, then you're going to find that that this pair is going to start to move down again. And so this is good, but you want it to keep going up. Come on, come on, come on. I wish I had like a little handle I could kind of grab it and pull it up and affect the entire market. That's in the next version. Yeah, so this is what you want to look for. Now you can see that it's starting to, you see that the CAD is starting to pick up, which is not good for our trade. It doesn't mean that you want to get out. It just means that just be careful, keep your eye on it, reduce the risk. Yeah, but for the time being, you can see that these two are moving pretty nicely away from each other. We'll leave it for now. We'll finish the presentation, and then I'll come back and we'll have a look at it and see how this one worked out. Okay, so that was a demo. Good. Okay, so that was pretty much trading the shorter term, the scalping strategy. Before I go on to cover an email that a member wrote, does anyone have any questions about this? Has anyone been trading this or tried to do it, if they had any issues with it? Okay, Rob, I can see. Okay, that's old comment. No, I don't think no one's writing any comments, so I think I'll move on to the email. Okay, someone's rude. Okay, Patrick is saying that he says, I had issues with the session open boxes initially, so I abandoned it. Okay, so the box wasn't working for you. Were you having a difficult time getting the session open times correct for your broker? There's a little utility that I'm going to show you, which is really helpful. It is called World Time Buddy. Oops. This one here. Okay, Patrick. I just want to show you this really great tool. First of all, you need to know, this is very important, you need to know the GMT offset of your broker. My broker is running at GMT +2. Now, how do I know? Well, if you go here, we go GMT +2, we add that. You can see GMT +2, so we're after 1400 hours. We're at 1449. If we go back to my broker, we're at 1449. Good. So my broker is at GMT +2. GMT, London, we can go, let's go London, make sure it's London, United Kingdom. And so here you can see that currently it's 1400 hours, 1449 with my broker. It's lunchtime in England, yeah, roughly. And we want to find 8 o'clock in the morning London time. So we have London here. So you take this thing here and you just move along here and you say, okay, at 8, when it's 8 o'clock London time, London, it is, with my broker, it's 10 o'clock. So I have to put this number in the configuration. So I have to, sorry, my chart moved away again. I have to go in here and put 100 hours in the European Open. it should say the London Open, the European Open. And when that's done, then the indicator will find this, will read this and correctly calculate the size of the box and 20 minutes into the session and stuff like that. The boxes did not show up on your chart. Okay, maybe I should log onto your computer and have a look. It shouldn't. It's very, very simple indicator. It doesn't require anything special. It reads the same product key as the other indicators. So if the other indicators are running, then this one should also run. Wait a minute. If we go here, we go to properties. If we go chart on foreground, okay, it didn't disappear. Okay, that's fine. So that shouldn't affect it. Chart on foreground, that doesn't matter. Okay, because that will make the, yes, but it is on the foreground. You can see how the chart, the bars are in front of the box, but it wouldn't make the box disappear. Not sure. We can have a look at that, Patrick, just to make sure that that you have that running. So just the really good resource is the World Time Buddy, and just use it to correctly find the values for the configuration. It's a tremendous tool. My pleasure, Patrick. Okay, good. If we go back to the slides, and I can have a quick look at an email that someone sent in, and I'm going to, after that, we'll go back to that pair and we'll have a look. So the email was related to accumulation. They asked, where do you draw the box, and what part of the accumulation do you draw the box? The second question was in relation to precedence, in relation to greater periods. So is daily supply and demand stronger than, for example, 1 hour supply and demand? We'll have a look at those. So if we open a chart, we'll take this one here, and we're going to find somewhere to draw the trend, sorry, the rectangle. So first of all, if you've walked through and you've done your top-down analysis correctly, then you will have an accumulation bar that you can put your rectangle on. But then you ask in your email, okay, but which one do I take? Do I take the first one or the second one, and do I put it on the top? We're going to use this as an example. Do I put it on the top to the wick, or the wick to the top, or what do I do? Well, first of all, you have to find the green candle, and sometimes the indicator won't identify a green candle. It'll simply just be a long candle, and this is simply because the algorithm wasn't able to do it because it was just outside the parameters for an extended range bar. But that shouldn't stop you from spotting it. Let's see if we have an example. It's pretty good at finding them normally, but sometimes it won't be green. But for the time being, stick to the green ones. Look to the candles that have a green line on them, like so. And then you look left and you say, okay, are you an accumulation candle? Yes, I am. Is the body of this candle within the range of the previous candle? Yes, it is. So we have an accumulation candle, and then this brings us back to this candle here, and then you ask yourself the same question. Are you an accumulation candle? No, I am not. Okay, what does that mean? Well, that means that we have likely an accumulation before and after an extended range bar. So we have an extended range bar here, accumulation, and a pretty much extended range bar here. And this means that we have a continuation pattern of some kind. So once you identify the area, this is easy because we only have one accumulation bar. You simply take the box, you attach it to the bottom of the body, and the top of the box goes to the high of the highest high of the extended range candle and the accumulation. We're not interested in this one because this is not a part of this price structure. So we take this one here. So you go like that, we put it like that. So this is where what it looks like. So we have the top of the box, we have the bottom of the box, and for entries, you would sell at the bottom here, and your stop would be a couple of pips above the high of the box. And so this is the pocket of liquidity that we are expecting price to have a difficult time moving through. And you can see here the price is moving up, we're accumulating. So what does this look like? Well, actually it looks like this, just upside down. And so this might mean that we are accumulating orders to really have another go at taking out this supply. We don't know yet, but we have a really strong push higher. The currency strength is telling us that this is moving higher. And so this looks pretty much like this. I don't know what's going to happen, but just like a quick observation may lead us to believe this price is going to continue moving higher. And so that's what you'll do like that. Simply you take the bottom of the lowest body, and the top of the box goes to the high of the highest high in that area of accumulation. And if we have more bars, let's find something that's not so clean. If we have, for example, this is really kind of messy. What would you do here? Well, you would simply, this is actually a continuation pattern. We have the accumulation. We have kind of a quote-unquote extended range candle, even though it's not. We have accumulation, and then accumulation, more accumulation as it drifted low, and then it finally cut loose here. So on this one here, you could say that the accumulation is this one here. So you would go to the extended range candle, which is this one, just like the longest candle in the area, and you go left. You an accumulation candle? Yes. Is the body of this candle within the range of the previous? Yes, it is. Are you an accumulation candle? Yes, I am. Is the body of this candle within the range of the previous? No, it is not. So this actually means that the low of the box is at the lowest body in this area of accumulation, which is here. And the high is at the highest high in this area, which is like that. So this area is like that, exactly like that. And you can say that this is a more aggressive stance, and the more conservative stance, then maybe you would go like this. So we just have a smaller box at the top here. And if you look, price went down, kind of moved up, and it came back, and it went back to this area very, very precisely, came back down, and then price stopped, went up, rejected. We had another test. This kind of went to the second area, the more conservative area, and then price just cut through it and kept moving higher. And so it's just a really good idea to ask these questions out loud, because these ensure that you're thinking the right thoughts when qualifying areas of supply, or rather accumulation, and trying to get your rectangle on them. And regarding the greater periods, like precedents, yes, daily supply is more important than a 15-minute supply or 1 hour supply. That said, it also depends what the context of the supply and demand is, because you can have hourly supply that will hold price and watch it move out of the area hundreds of pips. You simply don't know. But if you find, for example, that you have, for example, a weekly area of supply, and then you do analysis and you also find that you have actually a 15-minute area of supply. This one's probably going to be a little bit higher up here. Oops, that looked a little bit strange. Then price when it gets up to here, then it's going to have a big reaction at this 50-minute supply, even though it's 50-minute supply. So you can have opposing daily demand at the bottom. It comes up to this 50-minute supply, and the reaction is so big that it moves through the daily demand. And this is because the 50-minute supply is nested within this weekly supply. So if you're able to find these areas that are very, very nicely nested, you have weekly area of demand or supply, then within that you have a daily, within that you have a 4 hour and an hourly, then you have a really nice area to trade at. And price will typically have a very difficult time moving through those. Good, okay. Okay, Patrick's saying you spoke about using it at the New York close. Oh, sorry, the strategy or the box, or of course this is not a New York close trade. It's the strategy. Okay, it's a New York. It's like a New York or a London Open. So when you use the lines like that, but what I spoke about is that you can, just to recap there quickly, you can go back to the single configuration, and just to show that one more time, going to put this on here, plus strength. And we can see that we can use this strategy with this indicator, the text indicator, just because it gives us a lot more information at the close at New York. Not the close, just after New York is closed sometimes, so not exactly at the close. So you go like so, and we're looking at this information, and it could be after the close, could be maybe, I don't know, 5 o'clock London time in the afternoon. And if you have the Japanese yen that's being bought very aggressively and the Swiss francs that's being sold, then you can take this trade anyway. And I've done this quite a lot, especially here recently, and it's pretty good, especially if you can get the risk out quickly and just get a free look and see if the trade's going to work out. And so you can use especially this configuration with a relatively high degree of success because you're seeing more information. Where if you're looking at the scalp configuration where you have like 120 minutes, 60 minutes, and 15 minutes, it's pretty limited what you can see. But when you see here, you can see that we have the Swiss franc being sold off across the boards up to the hourly and up to the 4-hour. And this is, we have a look back of 8 hours, 8 4-hour periods. So you can see that there's a tremendous amount of information in this version of the indicator. So you can sell and buy kind of all times of the day when you're using this. Yes, I think that's what my comment went to. Good. Okay, let's have a quick look at that trade and see what happened, and have another look at the strength lines and see what they ended up doing before we finish up. Okay, you can see that, yeah, you can see that we had a bit of a pullback on the CAD. You can see that here nicely, CAD pulled back. And the Kiwi is still moving sideways, but it's moving less sideways now. It's drifting ever so slightly higher. And so, yeah, you can see that prices are touched into the area, the big figure. Now it's starting to drift lower. And this is what you can pretty much see going on here. You can see that the Kiwi is starting to pick up now, which is nice. And so now we want to see the CAD to continue its move lower before we will be completely comfortable about holding this trade. So you want to see these highs being taken out before we will get super confident, but we're not sure if we're going to get that. Why? Or because we are reacting at daily supply and at the big figure, so we want to be a little bit careful. So yeah, normally, I mean, these take normally like normally half an hour to mature. This is a really nice reading here. I like how the Kiwi's picking up and moving higher. Here it's a little bit flat. Yeah, so as long as this is above and this one's below, then you could potentially hold it if your stop is far enough away. But yeah, we'll have to wait and see. As we spoke about, this is pretty overextended. We have disparity in price, so we're probably going to have price maybe test up here and then move back down here before it has another shot at moving higher. We also have a trend line break, and this area of demand broke the trend line, and so price will probably come back and retest somewhere within here before it continues higher. So yeah, we'll see. But I hope that was a kind of an okay example to show this this way of trading. The time of day is off. It's not the London Open anymore, but still it gives you a pretty good idea of what's going on, despite that fact, simply by looking at these lines here. Super. Okay. Announcements. Yeah, I have one announcement, and that is that I'm working on a notification plugin for MT4 that will tell you which pairs to buy and sell and when. And I made a fully automated trading robot that trades this strategy. I just want to show you the results of that. Here. Which one is it? It's a scalp. It's this one here. It's going pretty well. I just want to show you what it looks like. Yeah, I implemented some new features. Let me show you what it looks like very quickly. I think it's this one here. So what it's looking at here, it's looking at slightly different information, but it's looking at strength information nonetheless. You can set it to do strength information where you go 1 minute. Oops. So I want 1 minute information, and I want to see 120 minutes. Comma, that's a long term. Medium term, I want to see 60 minutes. And shorter term, I want to see, I don't know, 20 minutes. You press OK. Then there's a strength divergence quality, excellent, good and mediocre. Of course, if it's excellent, you get better strength readings. If it's mediocre, you get worse. Good is generally okay. And this is going to inform. I mean, this is a fully automated robot, but I'm using this to test the strategy, and it's looking pretty cool. And so I think there's enough value in this to release kind of a notification software that'll help you identify this kind of stuff when it's happening, because I think it could be quite interesting. And also, and if you get into a trade like this, normally they go on over a course of some days, especially if you're looking at the longer term information. This robot here, this one here has been looking at 20 days, 24-hour periods, 20 hours, 20 half an hour, 20 15-minute, and 20 minutes. And it's been doing really, really well. And I don't do a whole lot of management. Sometimes I'll go in, I'll get in the trade, the robot will get in the trade, it'll send me an email, said it got into a trade, and then I will normally not do anything. Normally a couple of hours later I'll go in and I'll have a look, and then I'll see what it's doing. Then I'll perform a proper analysis and figure out if I'm going to take the trade off or let it see, and see if it's going to mature and turn into a profitable trade. But it's looking pretty cool, and so I think I'll certainly convert this into an indicator. And this is something I've got in the books, so this will come at some point in 2017. It's a very exciting project, I think. So that'll be pretty cool. What else do we have? I think that's about it. Yeah, there was I had travel in the agenda here, and it's not in here, but I'll be traveling from the 1st of the month, and I'll be gone for a couple of months. My wife and I, we've kind of pulled the plug, and we're going to Indonesia for a couple of months with our boys to kind of unwind a little bit. I want to finish some software, and I want to work a little bit less for a period of time. We want to kind of escape the Scandinavian winter, so we'll be gone. But I'll still be doing these symposiums, but I'm not really sure when they'll be. I mean, Indonesia we'll be on Bali, and it's 7 hours ahead of us in Denmark. So I could probably easily do these, because these will just be at some point in the evening. But I'll, of course, keep everyone up to speed as to when these are going to be held, but I'd like to try and keep them pretty much when they are now. I might move it a couple of times so we can get the members in Australia maybe at a better time so they can attend, because I think a lot of them have a tough time attending because it's getting a bit late. But generally speaking, I'd like to keep these at the time or close to the time where they're normally being held, because we don't have a lot of people in the room simply because people are at work in the middle of the day. And so I'll just try and figure this out and let everyone know as soon as I possibly can. Good. Well, I think that's about it. Does anyone have any questions before we log off for the day? And if you have any topics or anything specific that you want to have a look at, then please let me know, and I'll be pleased to get to that during the next session. I think the next session will be the last one, so next Monday, and then I'll have to kind of reschedule and get everything sorted for when we travel. But everything should work out just fine. Okay, Patrick. Yes, Serene. Let's see if he's got a question coming. While Patrick's typing, I'll just show you. In the Coach's Corner, we're trading an account, and we're doing really well. And I just want to show this. And this is kind of the live account that the account that we do. We do a live analysis here, and you can see that this one here. If we just go in there quickly, we can see it here. Yeah, here we have about 70%, 17% returns in 4 months, which is really nice. That's 50 pips, which is really, really nice, and very, very tiny drawdown. So this is really, really reassuring. And this is, of course, longer-term trading. And of course, we've been doing this on the higher time frame, so generally no less than the 4 hour. We're taking 4 hour daily and weekly entries. So these are not getting filled a lot. So typically we'll get between 1 and 3 trades a month. So not a lot of action, but this just goes to show that you don't really need a whole lot of action to earn money. And I really just like this way of trading, because you're trading at really big levels that have a lot of clout. When price gets there, price generally slows down for long enough for you to get at least the risk out of the trade. So just a really nice example there, I think. Let's see. Okay, Patrick is writing. What do you do when you have a strong currency strength reading on the TXT, but price is approaching a significant supply-demand zone, been having a few issues there? I totally agree. If price is about to reach a really strong supply-demand and the currency strength says to buy or sell into it, then I won't take the trade. I'll wait, because price will almost always react. So I'll pass on it, or I'll demo trade it just to see what would have happened and do a study of it. But I really don't want to take that, because they often go wrong. So typically when price is moving into the big figure or an area of supply and resistance, which is a counter what strength information is telling me, then I simply will pass on it, because it's not a good idea. Cool. Does anyone else have any questions before we close her down for the day? No? Good. Okay, well, I think I'll leave it for now. Thank you all very, very much for being here. If you have any questions about the software or anything that we do, please let me know, and I'll be sure to share everything to get your questions during the next symposium. And until then, have a magical week, a lovely weekend, and we'll see you all on Monday. Thanks all for being here. Bye-bye.